Day of Alexandra here with Forex market review for the following week, 22 April till the 26th April. Today's Forex market review I want to make a little bit different because I want to answer the questions of my friends from the Telegram channels who asked. So there was a question from the David and the Michael regarding to the COT, how to read it, interpret it, and where to get the informations. So we will definitely look at it, guys. Then we had a question from the cash about the swaps, when would not do, will we be getting positive and negative. No worry, cash, I will explain this to you. It's very simple. Then the next question was from the Milkseed, who asked about the Mexican peso US dollar trade. We will check the charts. And then two questions from the Ryan and Asa. They asked about the supply demand zones. You know, guys, this is a little bit more complex methodology, but I will try to answer how to identify which zones are more likely to hold and which ones not. It's as I said, it's a little bit more deep, but I will send you the materials which will help you to look at this. And the last question from the Patricia, my friend, she asked about the pound yen. She says it could go up, and yes, Patricia, you are actually right. I will show you on the charts, and this trade is as well very well supported by the COT data. It's just about the timing, and I definitely see a bigger move up, so you're definitely right. So this market preview, I want to mention this quote which I collected. It's develop the methodology and stick with it. Don't change your methodologies from day to day, and this is very true, my friends. What I want to point out is that everyone went through this stage that we've been looking for the better strategy, better indicators, and this and that, and we've been jumping from one to another because after one loss, and then we was thinking, if I trade this another strategy, I might didn't have this loss. No, it's not true. What we should do is to stick to one methodology, of course, as it says here. But what I want to say that every strategy have owns pro and cons. So some strategies you will get better entries with lower risk rewards. Some strategies you miss the trade. Other strategies you could be in this trade. You should not never look back if this trade could work or not. Stick to one strategy and work with it. Don't look to other strategies that you could have more trades or more profits. If you find a better strategy, of course, you must find something that fits to you. Then, of course, you can change it. But I highly advise that don't do it after the couple losses or something like that. Every strategy goes through the periods when you've been losing, and no one makes the equity like this. There always will be good and bad times, and especially in the trading there is a Pareto rule, which is, if 80 to 20, which means 80% of the 20% of the trades makes 80% of your profits. So even when you are right in 50 to 50 and you stick to the risk ratio 3 to 1, you can be possibly profitable. And there is no strategy which could be 100% right on. It simply doesn't exist, so don't look at it. This is just what I wanted to mention, but right now let's go back to the charts. Sorry, here I must change the time frame to the monthly. It's 1 month, right? So okay, so this is my strategy, and I'm not, of course, the developer. I just found these things around the internet when I was doing my research, and I found that this is something what suits to me, and I'm sticking into it. So I'm watching 4 time frames, or always I'm doing the top down analysis, and I'm watching this is the monthly, weekly, daily, 4 hours. And before every time I entry, what would be the best entry for me is for the long is if monthly is up, weekly is up, daily is up, and 4 hours is up. This is the best entries, and this is how you can best entry the trade. Sometimes what can happen is that you have actually the monthly trend down, and then all of these could be up. Then you should not be looking for the trades from the 4 hours, but from the daily, daily. Or what can happen as well is when monthly and weekly is down, then you should not trade from the daily but from the weekly. And this is more complex, but this is what I wanted to say. I always watch all these 4 time frames before I do any decision. So this is to make this clear, and let's check what news we have the following week. So there's nothing Monday, Tuesday, nothing on the Forex Factory. It's a pretty good pretty good calendar, but for example, my FX book is, I would say, maybe better, because sometimes they show that there's nothing on Monday, but on my FX book there is a news. So we must check as well. And so what do we have? We will have Wednesday night is Aussie, and this is as well during the day. This is gonna be big for the Canadian dollar, I believe, because it's a Bank of Canada monetary policy report, Bank of Canada rate statement, overnight rate, press conference. This is gonna be a huge volatility on the CAD. Then the JPY, Bank of Japan, nothing extra is happening. What mostly there's nothing extra happening on when is the Bank of Japan, but they can surprise as well. As well, what would be interesting is this for the franc, because if you can see the charts, the franc is really oversold, and National Bank of Switzerland can surprise a lot as well. So you just need to remember there is a Aussie CAD on the Wednesday, JPY on the Thursday, and Friday is franc. And then we have some news from the USD, of course. So let's go to the charts. I start as usually with the dollar index. So what do we have here? We have this uptrend channel, and here we had this range. It was very boring these couple days, and a lot of people was expecting the market to drop, and I was actually thinking that we might see the drop into this demand zone from we will see the move up. And on the 4 hours chart, this was really tricky, because here was as well the FOMC, which made just this, like nothing, and then they hit these stop losses and it start to move up. So what I'm expecting here is definitely this continuation in this my channel, because if we look a little bit more like this, it's my long-term channel, and inside is this small channel, and my target is here around the 90, around just something like a 100 numbers. Why I think it comes here is because what do we see here on the monthly and as well on the weekly? What is this? This is the stop losses. This is the trap, which will be broken easily. You can see it bouncing here, so it will be easily broken. And I expect that this supply zone, will be visited. And from there, we will see more deeper shorts, probably. So I'm very bullish with the dollar, and if we look to the COT data, what could we see is that we can see a little bit decreasing in the longs, but Where was this data? We can see that there is decreasing from 44k to 43, which is from this data to from this candle to this candle. They reduced the longs, which was probably closed somewhere here, but as well I see the reducement in the shorts, which was probably closed here. And now we don't have a data for these three candles for the Wednesday, Thursday, Friday. So what does it mean is that I probably there is definitely was increasement in the longs, or they closed the shorts, which moved the price up. I don't see that that the commercials are, you know, adding the longs any heavily, but they keep the shorts, you know, pretty around some decent numbers. So I definitely expect this go higher, and they will be hedging even more. So for now, I'm definitely bullish, because as well another reason is that these numbers are still not so heavy as these numbers. So we could go into the 87, 88, and even more bullish numbers. And here is a lot of room to go up. So this is for the dollar. Next one is silver. I added silver into my charts, and I'm actually adding every day one more instrument, because it's good to have a view about a lot of instruments and looking just for the best setups. You know, if you look just for the couple charts, you will be trading, you know, every stupid move up and down. But right now I have I have analyzed around 30-40 charts, but every day I'm adding one more chart, which I analyze all 4 time frames deeply, and if possible I add as well the COT data. So what do we have on the gold is this. We have on the daily this downtrend channel already formed. Now what is the problem here with the gold and as well with the silver is that we have these downtrend channels, and now everyone see that it's bearish, right? So that's why it's stopping to move down more. But we are right now in this silver, we are in this higher part of the downtrend channel. So there still definitely will be room to go down, and I don't think it will make any bigger correction. So the possible trade from the 4 hours chart could be when it comes back into this supply zone, which have created this strong move down. And now it's time to, how can I answer this question to the Ryan? He asking how, hi Dave, I wonder if you can go through tomorrow's video how you identify which zones are more likely to hold and which ones you will trade versus those you want. Okay, this is exactly the thing. So what I am looking for, the zone must be the one which has achieved something or which have the strong departure. So the strong departure for me is this. If I see that there was these two strong candles in a row, that for me means that the banks was trading. And if you look back as well here, I didn't trade at this one, but I have similar trade on the gold. We can look into this supply zone. This is a supply zone. Why is it supply zone? Because look at its departure and what it has made. Here was as well the demand zone, right? Because we have this strong departure up. So the demand zone is here. Here is where the banks accumulated their positions and they moved up. It's in the candle. It's just this little small tiny candle. This is what I'm looking for on the charts. So it's this small tiny candle. Here is where is their power, where is the last power where they accumulated for this strong move up. So from here I will draw my demand zone, right? And when this demand zone was removed by what? By this supply zone. So if this is removed and the move is very strong and at least one zone is removed, then for me I can consider this as a strong zone. It could be okay, it should be like this even. So what I can do then is once its price retraces back, I am interested to get into the short trade, right? And where I put the stop loss is that I have this supply zone, and at least once, not always, it depends what time frame is it, but if I do it on the 4 hours and this zone have a, I don't know, let's say 50 pips, I put stop loss behind the 50 pips, and I use, as you can see, this horizontal lines, it's the whole numbers. I put it as well behind the second whole number. You see, it's 1, 2. So I would put the stop loss here, and then the take profit is first low, and the second take profit is here, the opposite demand zone, right? And it's exactly where the price was reacting. So you have first take profit here, and then when first take profit is hit, you move it to stop loss to the entry. So always I'm looking for the zones which has achieved something and has the strong departure. Okay, you can as well have you can of course have a zone, for example, you can have a zone as well. I don't see any. Okay, here is actually as well the zone. Why is the zone? Because this is, strong, but it's not so big, but it worked as well. However, I wouldn't take a trade here because for me it's not strong enough, As well, you might see that I'm using these channels, so always I as well want to, be sure that the zone is with confluence, for example, with the channel. So I could have the channel like this, So always I would be looking to sell in the higher part, not the zone which is because you have the zone as well here. You can see this strong departure, right? But you don't want to sell this one because, it's like in the middle of the channel. You always want to sell on this higher part on the channel or close into here. So this is how I identify. But I will mention that in the other charts as well. Right now, this one, to show you, okay, I would sell here, blah, blah, blah. It's very easy on the chart which happened. But I will show you that you can understand this easily when you will go through the charts. And everything what it needs is only to, practice. You need to go through many charts. And you will find out what works for you and what doesn't work. When we look as well to the COT data on the silver, we can see that we've been longs around the 90k, and it's still being reduced, and right now only 74. And what happened last week with the shorts as well, it's finally can be seen on the shorts. So all this move down, which was happening this last 2 months, it's already was caused only by, look at this, by closing the long positions, and now we are 74. But the banks didn't add too many shorts, right? But right now they are already 70, yes? So they becoming even more and more bearish at the moment. And so this is just the beginning of the trend. And what is happening on the other side, we can see the commercials. And what's doing the commercials? Commercials are starting to adding the long positions. You can see how they increased from 84 to 109. So why they increasing it? Because they are hedging. They want to hedge their price, and so they added the positions here. Sorry, they added another positions here, here and here. So they still growing their long positions because they want to hedge and stabilize their price for the around you know, the numbers which they need. This is it. And the commercials, that's the companies who need the goals for the, you know, for some reasons. They hedging the price not for the speculative reasons. So they hedging it for that. And yeah, I will take a trade here, because here is the supply zone, and as well it will be in the confluence with the higher time with the top line of this channel, right? So as well, I'm using the market profile, but it is just for confirming me where the orders could be, and that. And if I as well, I'm watching the volume. So it's, you know, a lot of things what I'm doing, but I'm trying to simplify that. So yeah, okay. So the next one, and here I will show you more. Of course, next one is the gold. So on the gold, what is happening here? Here is actually nice downtrend. Actually, on the weekly, it's still uptrend because we don't have this downtrend line broken, and here is not any demand zones which would be taken out. So I'm still expecting it drop down, and I was expecting it already from here, all this big drop. And here was the actually similar situation as on the silver, but on this one I took the trade. So what happened here? We had the demand zone here, then market start to drop down, and here is the strong supply zone, right? Because we had this strong move down and then retracement into the supply zone. And in here, what I saw, and I'm talking about it actually already couple market previews, when I saw this big drop from 270 to 225. You know, it started to, for me, looks bearish, and when it was even on the top, it's very bearish for me. And I saw it on the other side as well. So what do we see here? The non-commercials reduce their long positions. That's the side who's trading for the speculations. They reduce their long positions from 270 to 225. And the non-commercials, they reduce their shorts from 470 to 428. So it's both sides reduce around 44k. So these ones doesn't expect the price will go up even more, because they don't need, so they stopping to hedging it. And this one is not taking the longs because they're not expecting to move the price up. And looks where we are now. They've been 270k longs, and right now 170. So 100k longs disappeared in this move down. And what happened with the shorts? From 99k, they grew up to the 121k. And looks at the ratio. Look at the ratio. What's happening? So we've been pretty heavily bullish, but not so bullish as it could be, because they could be even much more bullish. And what's happening right now? We are getting to, you know, to the 50-50, and it's even changing. And look at the net positions, 55. There was the reducement about almost half, and if you look here, it's like 1/3. So it's just the beginning of this downtrend, and it's yeah. So this is as well the answer to to the David who asked who is more important or relevant, commercials or non-commercials. So David, the both sides are very important. As I said, non-commercials are the speculators, so they trading for the profit. So if you see that they closing the long positions and they don't start to add more short positions yet, because they of course don't know where the price will go exactly. This side is losing sometimes as well, but this one is mostly dictating the price. But they're doing the hedging, so I cannot answer which one is more important or relevant. Both. The important is the how to say important is the both sides, actually both sides, and how they interact together, you know. So I cannot say that just one is more important or second one. Overall, which with this COT trading, you know, a lot of people are asking me how to interpret it, how to trade it, how to decide when to take a trade with it. You know, the best thing what you can do is to do your own research. You can take this data and you can go back and watch what happened. You can look 19th February, you can see the reducement in the shorts. What happened? Okay, 19th February, it's here, boom, it's moved down. Yes, and as well, you can look as well here, 16/9th, 16/10th. Let's look at this. You can check this. In here, which was on the 16th, where was it? Here we can see, for example, big change as well. It was on the 16/10th. Where is it on the chart? Let's check it out. Let's check it on the chart. We will see where is that 16th. Yes, it's here, right? So in here, so you can see in here they start to increase the longs from the 158 to 83, 83, 87, and then they reduce it a bit. So here is still the accumulation, but where the proper increasement came was here, from 187 to 218, and as well they closed the shorts. So here is big signal to go long, because you can see from 187 longs to 218 and the shorts from 100 to 86. So they added longs, closed shorts. What the other side did? The other side added longs, but they added massively shorts. Look at it as well. 332 to 384. So they added like 50k shorts. So they expected the price to go up. So they started to hedge it. And it was on the 18th. It was actually on the 24th, 12th. So it's a Christmas. So it was on the Christmas, and it's here. 24th is here. Right? Here. And look what happened then. Strong move up, right? And it happened exactly below these zones, which I think it was the supply zone. Yes. Because this was the demand zone. So this supply zone removed this one with this move, right? So this was the supply, and they did this increasement on the 24th on the other side to break this supply zone, which created new demand zone. So, and this demand zone is actually right now my target. So yeah, so this is the best thing how to do it, because what you can do, you can go to the internet and you can find, someone will tell you, when the non-commercials do this and this one do this, go long and blah blah blah. The best thing is I was following a lot of these people, and actually I paid for the stupid courses, and then I found it by myself what is the best for me. There's actually one guy as well who's doing similar Excel sheet like me, but he's collecting just the data from the futures, but I'm collecting the futures and the options, so it's a little bit different, but I think it's more accurate. For me, it works more. So you must find your own thing, and yeah, this is it. So right now on the gold, as I said, this would be the perfect short trade here, and this one is actually which I took with my guys in my group, and we have this trade, and I want to show you actually where did I enter. Actually, in the meantime, when it's gonna be uploaded, I can show you how this supply and demand works as well, because here is this, where is this gold? So best thing what you can do is to open your trading view, create your trading view, and draw the lines and these ones and do these predictions, because then you know if it will work or not. So this is you can see that this is the gold on the 19th. You can see down here it's on this 19th. So it came into the monthly supply zone, and I was expecting this drop, and as well my confluence was this, that I have this uptrend channel and I'm in higher chart. So I was expecting the price to drop, and boom, it dropped very nicely, right? It came into this demand zone. From this demand zone, I was expecting the corrective move up into this supply zone, and actually I did this prediction as well. Where was that? Right, it's here. So the market dropped from this one, it came into this demand zone. Why this demand zone? I would take the trade even if it's counter trend, because look at this strong zone, strong departure. So I thought that after this we should see some more some correction, and it happened. Boom, market moved up nicely exactly into the supply zone where we had the reaction, and from here I was actually expecting the short as well, right? This is how I planned my short. Here is the supply. So price came up, nice entry, almost zero drawdown and drop down, right? And actually this trade, it's this one, and I entered it here, and I'm still holding it. I closed the part already, and it's doing pretty well. So if you look at it on the daily, right here is that supply zone, which was this, and this is where I'm looking to enter my trade, right? So right now the trade is doing pretty well. I opened it on my trading account where it's not any other trades, because I want to leave this one go for the long term. So with just 0.05, I am right now in the profit 214, and here is the thing which I will answer as well to my friend Karish. So he asked about the swaps. So look, here is the positive swap, my friend. So about the swaps, I will not make any big explanations, but the thing is that there is a positive interest rates and the negative rates. So the dollar have the positive, so it means that everything which you trade with the dollar, like a euro, if you buying the dollar against the euro, if you trade euro, USD, for the dollar have the positive, so you should have positive swap on the euro USD, right? So right now I have this one, so it's the gold, and I have the positive swap. And if we look to the euro USD, right, you see positive swaps for the shorts. So right now the dollar have the positive, and what is as well, I don't think there is nothing else actually. So if you shorting these pairs, you have positive swap. If you shorting the negative ones, if you are buying them, you go against the swap. So this is I think you can, if you want to know more, I suggest you to go to the baby tips and you can find there is a like more explanation. But I have this indicator which you just put to the chart, and you will see here the swaps. So the first one is for the longs and the second one is for the shorts. So then you can just look, you can just go through your charts and it will show you USD CHF, swap longs positive, swap shorts negative, Euro Aussie, swap longs negative, swap longs positive. And every broker have it a little bit different, but you see this chart will always show you. And this indicator as well have these levels, which is the whole numbers. And if you don't know how to draw some levels, these levels works fine as well. So Kairish, this is my answer for this question, and I will send you this indicator in the Telegram after I make this video. Right, hope this helps. Okay, so let's move back into here. So yeah, so right now the gold so right now the gold has broken this demand zone, which is creating a new supply zone, and I would be interested to add another position to my short when I'm looking at it from the 4 hours chart perspective. I would be interested to enter from the supply zone, but not from the. But now it's the question, right? Which asked Ryan, which one is the good one and which one is not. So I have this supply zone which have absorbed this demand zone. So I should be taking the trade from here, right? And so my entry should be something like this, actually. But if we look to this descending channel, it would be just in the, this small part, and there is and no one can know if it will happen like this or if it will go higher like this. But I already have my one short trade, so I'm right now in the profit, and I don't need to add one more here. I want this one, which is more probable that it will happen, so I want to add the short here. Another thing is that now, everyone who looks to the gold chart, you can see, everyone see it's bearish, right? So, and if everyone see it, it's a little bit late. So what will basically start to happen, they might start to do, something like this. And what then happen? Here will appear the stop losses. So they will come for them. So we must as well think what the others are probably doing. And I'm not only one who can see this, everyone can see this, and now the banks, they showed their cards a bit, so we see that they are bearish. And after this happened, after they show their cards and everyone see that they are bearish, what they mostly do is that they make some bigger corrections. So I will take the trade from this second zone, which is in confluence with this daily zone, not from this one. This one I think will be taken out. Maybe we will see some higher move, but if I will take a stop loss here, I will take the trade from the second zone. And if I will take a stop loss here, if I will be stopped out here, I will take the short from here, but from here I know I will make a profit, because this is most probably will likely to happen. Because sometimes when we have like a free touches of the trend lines, the next move is the most strongest one. Okay, so the next one is the Aussie, and the Aussie is a bit confusing me a little bit. I must say that I don't like this chart, because I'm bullish with the dollar and bearish with the Aussie. And what do we see here? We saw this this move up, which is on third touch on this weekly downtrend line, and on the daily, for me it was this type of move is for me, when I'm looking to the market dynamics, this is the accumulation. And if we look, this is strong move, this is strong move. And always they go up, like accumulation, and strong. So I'm expecting the move down to be the stronger one. And if we look to CAT data, something interesting happened here, because I thought that we are really building the positions for the shorts, but some shorts was closed here and other longs. I don't know if they did it for the stop hunt. So for me, for now, I would take a short here because of the technicals, and the COD is still very, very negative, so it's bearish for me, and it means that if the banks should go up, I don't think they will go up with these many shorts positions, because they would want to close them somewhere, and it would not be here. I think it would be, down there. So with the Aussie, I'm bearish at the moment. This is the euro, and the euro as well. This one is very bearish. I said it many times, and we can see that on the daily. And here is the problem, the mistake I did, because I was too much focused on thinking. I was overthinking. That's why I didn't take a trade here, because I had my seller limit here, because I was thinking that traders will put stop losses here and they will take them out and then down. Yeah, so that's what I saw, and that's why I wasn't in the trade here. So as well, this is the answer to the David's questions. Ryan's questions. Which the zone is the better? There's if it's the daily zone, what I should do, and I didn't do, I should stick to the strategy, and I should follow the rules, that the zone which has absorbed the zone, I should take a trade. And as well, actually, if you look, it was on the higher part of this downtrend, as descending channel. So I should trade here, and should not be overthinking to some another fake out like it happened here, so I should take this trade. But what I did is that I entered here with when it was dropping down. So I have the trade here, actually, if I remember well. Yeah, I remember well, of course I remember well. So I have a trade here. So for this moment, I would be interested, if I would be interested to take a trade, which I am as well, to add another one. Now I will have to do it from the 4-hour zone. And how could I do it? Is this way. Of course, it would be the best if the market comes back up into my supply zone, which was this one, and it's supply zone just for the reason because it absorbed this trend line, and the departure was very strong. Right now, why I expect that the move down will be so easy is the reason that these zones below was tested. So I would even not suggest to take a trade from these zones. So this was tested, and I think it will be broken down very easily. Right now as well, where I will take another short is here. Once the price break this low, I will enter the short here, and I will put stop loss just somewhere here. Because what mostly happening is that, and this is actually the disadvantage of my strategy, because I'm trading the retracement, but the breakout is as well the very powerful, and I think that if the price breaks here, it will not do the retracement. They will not give more chances. So sometimes the biggest trends, they happen that just the price drop, and it continues. And this is the disadvantage of my strategy, that I sometimes miss these trades. So I will definitely want to take a breakout here as well. With COT data, if we check that, we can see that the banks they added a bit longs and they didn't change too much shorts. But what is the data where it was? So we can see that they added longs positions from here to here. So why was the longs added? To move the price higher, right? So this is why. Now when the price is dropping down, you can see that the commercials, it's the side which is the hedging. They preparing the adding more of their longs, so they expecting the price to drop down. And here, as I said, we saw that they added some longs, but they reduced a bit shorts. We don't have the data for these next 3 days, and definitely they added shorts here, but we don't see this yet. This is why the sometimes as well happening is that we have the range, and Monday, Tuesday nothing, Wednesday and Thursday, Friday, or Wednesday, Thursday, Friday, they drop the price down. Because why they do it? Because they know that they have to report the data here, and we don't know what is happening here. So they're trying to confuse, And sometimes the traders who's watching just, the traders who's watching. Let me show you. Some traders are watching just, for example, this. If we look, they're watching just this. And this is not enough, because you can see many these so-called Forex gurus. They will show you this, that they're watching the COT data, and they will show you that you can see that the longs increased for the 4000s and the shorts increased for the just 200. So they see this, and then they think that the market will go up. But you must put it into the confluence and watch the whole story. And this is watching actually just last changes. It's wrong. So the euro is definitely very bearish. You should not be looking for the longs at all. Next one is pound. Pound is very tricky market at the moment. For me, I don't like it too much, but what I see is happening here, and as well with this, more the COT data helps me. So we can see that on the monthly we have this demand zone in control, which is pushing the price higher. Weekly we have this uptrend and this beautiful zone down here where I'm still interested to take a long. And now let's check what do we have on the daily. So here is this 222, and it's a perfect, what is that? It's nothing else than just this trap. So here it's gonna be stop losses, because the people think the price will go up when it's bouncing here, but it's wrong, because look at the 4 hours. So here's the stop losses and the zones are below. So I think we will easily see this drop down through this stop loss zone. And when I check the data, here it is. So we can see that the banks added 45k longs in this period from here to here. However, when they reported these longs, it was here on the Tuesday, and then we don't have this data for when the prices start to drop. So what I think is that they closed these longs on the Wednesday, and price started to drop, and as well they built some shorts. So this is why I think we will go more deeper down. And if we checking what is the other side is doing, they're not adding too much longs. They actually reduce their long positions. So I think the price will go down. And this long, which I'm expecting here, it's definitely will bounce here a bit, but not the big one. So I'm very bearish in here as well. But it will need some time, and I think we will see more ranging here. Something like not. It's definitely not gonna be the big strong uptrend, because we have the strong dollar. But what is actually could be happening here is something that the pound could be ranging for the months. It could be ranging for the months until the dollar will get into that supply zone. But and then it can start to move, because it will be waiting till the dollar will get into that supply zone and bounce and start to be weak. So pound, I'm not interested to trade at all. It could move up or down, but the market offers much better opportunities. This is the kiwi. Kiwi is as well ranging, and it's very boring for me. I would be interested to take a short if the price retraces into this supply zone as well. From the 4 hours it looks like this, and it looks even much better, but I'm not sure if it will give this chance, because this supply zone has removed 1, 2, 3 zones. So if I will get the retracement here, then the short is definitely good for me. Next one is US dollar, Canadian dollar, and so weekly we have strong uptrend. Daily it's doing this tricky thing, and the 4 hours it's on the range. So we have this range here, and I still think we will probably see some stop hound of these things, because the banks, they want to move it up, but now is the thing how they will do it. So we have the stop losses here of the people who shorted, and here, and so, but we have this Wednesday, is it, if I remember well, we have a lot of news about in the Wednesday. So I think they could create some drama, drop the price down, and then quickly up. So I will be waiting for this situation. I'm not gonna enter right now, and I would be very surprised if it will go up just like this. I don't think it's not gonna happen, because check this data. So we can see that the market makers, they reduced their longs positions, and they're reducing their shorts positions as well. So they're reducing their longs in here, and this side is starting. They are something like in the average, but they reduce their longs, so they don't expect the price to go too much down. This is the question. So we will see. I'm still waiting for this drop down. If it will not happen, then I will be interested to take the breakout trade, and as well put the stop loss somewhere here. Because if this breaks strongly, I don't think there will be many chances to drop down. So I'm interested to take a buy here or the breakout trade. So I wait for this one. Okay, this one is a Swiss franc. Swiss franc is very, very bullish, and what do we see here? It's in uptrend on the monthly, uptrend on the weekly, uptrend on the daily, uptrend on the 4 hours chart. So we should not be looking for the short at all. Now here on the weekly, we have the new zone which has absorbed these two supply zones, and it's eating this one as well. And I think I am actually expecting on the daily, and I think it's not gonna happen. If the price drops down here into 10737, I would take a long, but I don't think they will give a chance. I think we will most likely see continuation to this supply. So from where we could see some corrective move, but I think this is most likely gonna happen. So this was the hard to trade. Some traders who's trading the breakouts and they entered, here they could be in the trade nicely, but I'm trading the retracements, so I missed this trade, and I'm thinking to take a trade, maybe from here, from the 4-hour zone. If this one will not work, then we have another 2 zones, and actually this zone is same with this one. So I will try to take a long here. If it doesn't work, I will take the next one down here. The data only confirms that. We can see how the banks added 4K longs and they closed to shorts. The second and the commercials, they start to hedge strongly, So I think that it's on the Thursday, sorry, the Swiss Commercial Bank, Swiss National Bank, it would be a nice opportunity to enter the trade. This is the USD JPY. This pair, I think, is taking a headache for many traders who shorting it, and I actually shorted it here as well, and it was a mistake, so I'm out. And right now, what is going on here? So we can see that the monthly is uptrend, but it's in the range, so nothing here, but we have this supply zone. On the weekly, we have this supply zone as well. Sorry, this should be weekly time frame. Okay, like this. So we have as well this nice supply zone which absorbed this one, demand zone, and price is now moving back, and I think here we will get some nice bounce down. Until then, it's very bullish. Right now, here is as well similar thing happening as we already seen in some charts. We can see that the price is approaching into the supply zone, which was easily absorbed. And right now, what is going on? People see this double top or what? I think it's the most bullshit formation. So I think this would be broken up very easily. But if the price retraces down, here I would be interested to take a long trade. As well on the 4 hours chart. We are here. So from this 4 hours zone for the continuation in this channel, we don't want to take short in the half of the channel, but only on the tops, and longs only bottoms. So this is how I want to take a trade here. And if we look the data, check this. Longs, they added 20k longs, 16k longs added, and adding as well the shorts. You can see how they adding as well the shorts, so they slowly preparing for the hedging, So right now we are seeing that the banks actually they've been bullish, then they went a little bit less bullish. And right now they're going to build it again to the extremes, and these longs are added to push the price higher. Meanwhile, when they building the shorts, commercials expecting the price to move up, so they rising their hedge trades from the 121 to 144. So you see how it works, these all confluences, and this of course give me the answer to Patricia. If I think that the GBP yen could go up next week, yes, I think it would, because the USD JPY is bullish. The pound, we can see It's getting bullish as well. And if I go right now to the GBP JPY, what do we see here? We can see weekly is testing this downtrend line, and I think it will be broken easily, because these tests around here, it seems more like that. Then on the daily, we are in this channel here, so continuation up easily, supported with the COT data. And right now here, what is here? It's a range. It's nothing else than a range on the 4 hours chart, and I have this nice zone here. This one was tested, so I'm not interested to take a trade from here. Of course, this zone could work, but what I most probably would like to take a trade from this zone after this low will be taken out and these stop losses from here. That would be a great trade for me. So I actually will be looking to take this trade. So Patricia, yes, pound yen for me is bullish. Where we ended up. So let's check some another pairs quickly, because the video is already too long, but I wanted to always to answer, so I don't want to do just what I expect and blah blah blah, but I want to explain a bit what you are people looking for. So here is the oil. Oil is in the overextended trend, and I think it will still continue up, because right now look where we are right now. And look to the data, very bullish. Banks are still adding, other sides still hedging, but we are approaching into this level of the monthly supply zone, weekly supply zone, and here will be dailies and the supply zone. These zones, even if is in the uptrend, I expect the bounce here. So it will take some time when it gets there, but I think it could be in the next week. Next instrument is the Mexican peso. Okay, actually, here is the answer for my friend Milkseed. But I must find this one where I have this this one, Mexican peso. So what is going on here, my friend? We have on the weekly, it's uptrend, because we have higher high, and right now it didn't make the lower low or lower high. So right now this is the big range on the weekly. On the daily, we are getting this, and what do I see here is, why is price still dropping down, is that it actually created one low, but it still didn't contact this demand zone. Here is the second low exactly above that, and here is the third one, and right now the price is moving like this. So the people who entered, they have the stop losses below these lows. Those who don't see this supply zone, which is the fresh one and strong one, I think we should see a little bit more drop before we start to move down. But what I suggest is to wait on the 4 hours chart until we get the break of the trend line and some retest. The problem of the trading, the retracement, is that this doesn't have to happen. So the best would be to watch it, have the alarm on the trend line, which I actually could do. I can add the alert when the trend line is crossing up, and it will give me the alert when this is breaking up. Then I would be interested to take a trade. Yeah. Okay. So what was the next one? Which I wanted to show is this, actually, my friends. Check this one. I actually not trading much these, actually not at all, these charts, but this looks very interesting for me. This is platinum, which is the metal, precious metal as well. And what do we see? We saw the all-time high, and now we are getting this break down, and this new nice supply zones for the potential shorts. And if we look as well to the COT data, look what happened here. The banks closed their longs positions. They've been actually closing them for quite a while, some time. You can see they've been on the extremes. They've been 18,900, and right now they are just 12,000. Yeah, and they actually closed some shorts as well. You can see that they are not so heavily shorts as they've been here, because they probably expecting the price to move up. So we will right now see that they will be adding as well some longs, but I think we might see some bigger drop. So I will be watching this. And as well, if I'm looking to the commercials, I can see that they reduced their short position, so they unhedged themselves. So after the retracement to the supply zone, I expect it to drop. So this one will be really nice. Okay, and this is the Nasdaq. Nasdaq is as well very interesting right now, because it's as well making the new all-time high on the daily. So we can see here is new all-time high on the 7,650. And if we look at this, what is happening here? We are having all-time high and commercials not hedging themselves too much. Non-commercials reducing longs, adding shorts. They added 3K shorts and reduced 1K longs, which happens here. So they probably preparing themselves to build the positions, and you can see how this exposure gets changed in the last week, from the 54% longs to 46% shorts, and right now we are 47% longs and 53% shorts. So you can see something is going on, because they definitely not adding too much longs and they preparing the shorts, and it's on all-time high. Second retest, and on the monthly, on the weekly, around the supply zone. Well, let's see. It's very nice to see what it will be going on. This is the Dow Jones. Dow Jones, very interesting as well. So we had this all-time high here, then the price dropped strongly. Now the price is moving up in this trending channel, and right now here will be the top of this ascending channel, and as well this supply zone. So I'm expecting something's gonna happen here. Let's see. I'm watching it closely. And this is probably everything what I have for this week. Yeah, I have a lot of analysis for some other pairs, but I don't want to make this video too long, so I will post them in the Telegram channel, or if you're interested in my premium membership group, there will be much more about it. And right now, the last thing which I will answer to my friend Michael, who asked how to compile the data and how to add it to the Excel sheet. So for those who was watching this video, you can see it right now. So Michael, I'm going to these websites. It's CFTC, and there is all these data which you can collect for every year. So basically, if you look to my this COT chart, I am collecting it like from the 1 year 95. Some of them, okay, here I don't have this calculation, so I will have to. You can see that here I didn't fill up this completely. Okay, anyway, I'm not gonna be fixing this right now. So this is my, the formulas which I have inside. But what I want to show you, I am compiling this data from the all possible history what you can, because then you can go through the charts and check these all biggest changes and learn from that and see how the banks behave when they are overbought, oversold, and it will gives you, it's only the way how to learn it. I can explain you guys a lot, but it's difficult. You must get the feeling of that and read their game. So I'm going to this website, CFTC. I will give you the link in the Telegram channel. Just contact me for. So I'm downloading this Excel sheet. Yeah, okay. So the next thing, here is the couple data. Here is the futures data. Next one is futures and options and the commodity index. I've been compiling futures only, but right now I changed, actually a couple of weeks ago, maybe months, I changed to futures and options. So I'm compiling these ones because I think it's more accurate and it gives you the better picture. So I'm downloading this Excel sheet, which I open. Wait a second. So you download it in this zip file, then you open it, and it will give you all these data for everything updated for this year. So then what I do is that I add the filter here. I add wait a second. It's a little bit longer process to get the data what you want to. So I add here the filter so I can filter it easily. I add the filter, and as well what I do, I am looking just for the non-commercials long, non-commercials short. This is the spread. I'm not interested in the spreads. It's the another operator on the commodity, on the exchange, but I'm not interested in these. And commercials long and shorts. The rest of that data, it might have some value, but not for me. I'm not interested in it, so I delete it. As well, what I am not interested in is, okay, the open interest is good, but I have the calculation for that in my Excel. This I delete as well, and this I delete as well. So this is what I get then. Then I mark this one with the green, for example, and this one as well. So I can see, give me a second, I must drink. So right now I have all these things for which I could collect the data, and I have here what I need: commercials long, commercials shorts, sorry, non-commercials long, non-commercials shorts, and these ones. Then what I do is the simply thing. I have my Excel sheet, sorry. So, and I will show you, I left this one empty, right? So right now I'm looking to collect the data for the pound. So I go here and I will write British, and I have British pound right now here. And in my Excel sheet, what I have commercials long, which I get here, commercials short, which I get here as well, and non-commercials long, non-commercials shorts, which I get from here as well. The rest is my formulas which I'm calculation. So it's a total which is the long plus shorts, as then I have the calculation of the percentage of longs of shorts from the total, and then I have the net positions, which is actually the longs minus shorts, and then change from the last week. Yeah. So what I basically do is simply that I collect this long and shorts and I include it in my Excel sheet, right? And then commercials, right? And this is it. This is actually all what I need to do. And I need to do this for all my pairs which I'm watching, like is the dollar, is the Aussie, and all of them. But then there is something which I have to point out as well, and I will show it on the JPY. We all know that the market is traded. This is the Forex pairs, which is like the USD CHF and this, but the Forex is as well and mainly traded on the spot. So basically, for the all pairs, like is the let's take it like this. So here. So for the as I showed you right now, for the GBP, I just copy and paste because it's the pair which has the format like GBP X USD, right? But as well, some pairs which are these ones, the CAD franc and Mexican pesos, are actually in the format USD JPY, right? But this data which I am collecting from here is actually the data for the indexes, for the pound index, dollar index, CAD index as well. So, and for the JPY index. So if I want to get the data for the JPY, USD JPY, I must switch it. So if you look, and I will show you this to get the example to easily understand it here. Right now I must switch this symbol and I will put the USD JPY. So now watch just these two top charts. Yes, please watch. Just forget about this. So we have this is USD JPY and this is yen futures. And if we look, we have these charts are actually opposite because this is the yen futures. This is the yen futures contract. So it means it's a JPY USD, and this is the spot. So it means is USD JPY. It's opposite. And right now you can see here we have this range and then the price dropped. We have this range and the price move up. So these charts are actually opposites. So what I do when I want to get the data for the USD JPY, what I have to do is that I actually switch the longs with the shorts to get this. So actually on my Excel sheet, the longs are exchanged with the shorts to get this data, and I will show you right now. So I go in, and I will find these Japanese yen, and right now I collect the data, and this is the shorts, and I copy and paste them to the longs because this is for the yen contract and this is for the USD JPY. Sorry, I took wrong number. Wrong. Okay, sorry. Yen. And yeah, so I must exchange it. So I take the shorts and I actually add them into my tab into the longs. I take shorts and I add them to the longs. Right, longs to the shorts. And as well, same I have to do with the other side. So longs are shorts basically. Sorry, short, and shorts are longs, right? So this way I will get my data for USD JPY and not for the yen contract. And this is the way how I collect it. So I think I hopefully answered all questions who you asked, my friends, and this is it from me. This video was a bit longer, but I think it will help you. It will help you a lot with to understand what I'm doing. And never don't hesitate to ask me anything regarding the forex trading. It's my very big passion, and I'm always happy to answer. But don't, of course, those who are not in my channel, join into my channel on my website. Well, if it sounds well, so join our channel. And those who wants the exact entries which we trading with in my Telegram channel, in the premium group, you are always welcome to join, because there you will get much more info, much more entries, how to, and with the explanations how we trade our signals and the stuff. For example, like this one, right? This is what I posted to my friends in this channel. It's just for the 150 euro donations, 150 euro, which is actually, I would say, nothing. You know, for the compare what you get for this, what I'm doing for the people in my free time. Okay, anyway, have a great rest of the weekend, and bye bye.